Hi, Dylan. Thank you very much for joining us today. How are things in Toronto?
Very good. Thanks, Jimmy. Always a pleasure to be on.
So, we have so much to discuss, and I don't know where to begin. If we should start with the Trump-Trudeau trade wars or the fact that our premier wants to shut off electricity to the US. But myself, I think that's all noise. So, what I really want to focus on today is the Canadian economy. And a lot of people might not realize this, but the Canadian economy is in pretty rough shape. And I recently read an article and it was discussing the GDP per capita, which came in at $53,000. And when compared to the US, the GDP per capita in the US is $81,000. And I was shocked by the discrepancy of these two numbers because I would just assume because of our proximity to the US, that we would benefit from some of the riches that they've experienced here in recent years. Why is our economy so weak? And maybe you can just give us an overview of what's really happening here.
Yeah, sure. I mean, lots packed up in there, but I think you're right to be looking at things on a per capita basis because you really get a different sense of where the Canadian economy is if you look at it just in aggregate or if you look at it what's happening per person. So the I'll start with the aggregate economy. And if you look at, GDP growth ticking along somewhere between 1% and 2%, inflation under control now, interest rates coming down. None of that looks particularly awful. It's not booming, even on an aggregate level, but none of that sort of would look too bad. Or if economists look just at those numbers, they wouldn't say, there's grave cause for concern here. But then if you look at it per person, you start coming across some much more worrying statistics. So as you mentioned, not only is GDP per capita lagging the US, and some of that discrepancy is things like the weak loonie. So when you make the comparison in dollars, it looks a little worse. But the real problem is it's negative. The income per capita and expenditure per capita in Canada has been falling for 4 quarters, and before then it's been pretty flat. Right? You can also look at productivity growth, which is really what drives long-term growth and long-term prosperity. It kind of goes through the cycle. And if you're growing your productivity, your economy is going to be better off in all sorts of ways. That has been flat overall since 2015 or so. So it's really just plateaued out. And unlike in the US, where COVID happened, and there seems to be a huge amount of innovation that happened around that shock that was generated by COVID that has actually made people more productive in the US. Canada, and it's not alone, it's the same in Europe, it's the same in the UK, is stuck in this productivity slump, right? The other kind of part of it that we have to acknowledge is that when you look at things on a per capita basis, there's also obviously a denominator effect. How many people are you dividing by, right? And so if everyone is individually not becoming more productive, but you're adding more and more people, then your per capita numbers are going to look worse. And I think there's a sense in Canada that there's been a lot of immigration in the past 2 years, but I'm not sure everyone understands exactly how much there has been, right? If you just look at raw population numbers from the monthly labor force survey, and you look at the working age people, so age 15 to 65, prime working age, that is growing at 3% per year, right? Now, 3% population growth is an enormous population shock, right? When I was covering Europe 10 years ago, there was huge panic about the number of asylum seekers and refugees that Germany was taking in around the start of the Syrian war. And of course, recent events have made me think about this again. And it was a massive political event and huge attention paid in Europe to the population surge in Germany. 1% population growth. For all that panic, for all that huge shock, how are we going to absorb all these people? It is a third of the proportional population growth that Canada is experiencing. Now, the difference, of course, is Canada is a policy choice, and there is potential for long-run growth to be generated by these people coming in. But the problem is that in the short term, the frictions and the challenges of just integrating that many people into the economy that fast is basically impossible. And so what you're seeing is a huge buildup of slack in the economy. There's excess slack, excess capacity, and that's why on a per capita basis things look bad, and for Canadians things feel pretty bad. The private sector is not able to absorb this many people into gainful employment. And in fact, without the government sector employing a big chunk of them, basically none of the new additions to the labor force would be employed at all. Um, Private sector employment growth has pretty much flatlined for the past little while in Canada. So there's a problem here. This is why the Bank of Canada can be lowering interest rates fairly aggressively as it is, because this amount of slack is actually disinflationary. The challenge from a growth perspective is that we've now had the government announcing that for the next 2 years, net migration is going to go slightly negative. So we're going to get a huge change in the pattern. And what's happened really is we've gone from a situation of high but quite stable immigration collapsing in COVID, then 22, 23, 24, enormous levels of immigration, and now we're going a bit negative again. So there's a lot of volatility in the immigration flows. But that pause is definitely necessary to sort of absorb people into the working economy. Problem is that when people arrive, they bring money with them and they bring spending power with them. And so you're going to start seeing an improvement in the per capita numbers, but the aggregate numbers are going to slow down. And so the outlook for Canada isn't, before you even think about Trump and tariffs and all that kind of stuff, Canada's sort of in absorption mode, and that's not particularly exciting from a 1 to 2 year outlook perspective.
Couple of things I want to mention. First of all, I want to provide a little bit of context for our viewers. When you talk about immigration and the number of people that have come into Canada, in 2023, it was 1 million people, give or take. Half of those people came into the Greater Toronto Area. Toronto has a population of 5 million people, so our population effectively increased by 10%. So you can imagine the strains that will put on the infrastructure, on transportation, healthcare, and education. It's caused a lot of grief for the people of Toronto. Now, you mentioned productivity has been in decline or has been stagnant for the last 10 years. And the immigration situation, that's a recent phenomenon. That just happened in the last few years. Why has productivity been stagnant for the last 10 years?
Well, if you could answer that question, I think you'd have a job as finance minister pretty quickly. It's a tough one. Productivity is a bit of a myth to economists. We know that in the long run, fostering sort of conditions for innovation is very important. But on this sort of time horizon, it can be very difficult to say sort of why productivity slowdowns would happen. But certainly part of it is that there seems to be a loss of dynamism in the Canadian economy kind of over this period. And it's hard not to just ascribe it to, a little bit of the usual stuff that we talk about in Canada. Very concentrated economy, fairly high levels of oligopoly. So a lot of sectors are dominated by a few small firms. There's a lot of research that shows that over time that can stifle productivity because you don't get the sort of creative destruction, entry and exit that you want to be getting. But there is also a fact to do with labor supply. And that's, I mean, more of the case in the past few years, but Canada has switched its skills mix a little bit. So a lot of the associated immigration surge that we've had was designed to fill supply chain problems, which were a very real concern in 21, 22, and early 23 in industries like construction and generally lower skilled industries. And so Canada's kind of switched from an old model of really targeting high-end, highly productive immigration flows, and the sort of average skill of the average immigrant that Canada has welcomed is a bit lower. So what that means is that you don't get as fast of a productivity gain from that. But I'm still an optimist in the long term because there's really nothing that sort of can help boost productivity like a big expansion of the supply side, which gets absorbed and put to work over time. The problem is the time piece. It takes a while, and in the meantime, as you mentioned, when the inflows happen that quickly, it strains infrastructure and it strains the ability of the government to meet basic services, and that actually has an impact on other areas of the economy. So one example would be that if you get, as we've had in Toronto, a sudden gridlock basically of the traffic system, well, people are spending an extra hour getting to work. That has a direct consequences on productivity. And so you can see how sort of it's very, very complicated, but in the short run, you can have these sort of shocks. The other thing that people are getting sort of excited by, I guess, in the private sector is the idea that there has just been a high regulatory burden in Canada, both relative to the US and relative to recent history. And if that can be whittled away a little bit, there have been some government policies sort of coming out that are targeted in that direction, but you'd probably see more if there's a change in government in the next election. That can help spur investment, and really, we're missing enough investment to be getting real productivity gains.
And just to clarify, when you talk about productivity, you're talking about productivity, which is
Yes.
essentially the output of an individual.
Yeah, so there's different types. The easiest one to measure is labor productivity because you can just divide GDP by the number of workers. There's also something else that we call total factor productivity, which is if you account for how productive your labor is and you account for how productive your capital stock is, there's a little bit extra always left over in the growth calculations. And that's what we call total factor productivity. That is the one that is highly, highly linked to innovation. So that's what you get when instead of just, making a worker more efficient or getting a better machine, you have a whole new way of doing production, right? You have, say, AI incorporated into your services industry in a way that it never has been before, and that drives this total factor productivity. So that could be coming down the tube. We don't really know. And we don't really know how much Canada will get versus the rest of the world, but that's the kind of missing source often that is very hard to create it, and really it requires an innovative business services sector.
So we have a declining GDP and GDP per capita. We have declining productivity. And another number I saw recently was the unemployment number, and it came in at 6.8%. And excluding the COVID period, this is the highest we've seen unemployment since 2017. What's happening here?
Yeah, and in fact, maybe even a little further back than that. This is kind of the worst we've seen in the labor market since that big oil shock in 2015, 16. What's happening? I think we've spoken about it already. There's been a huge, huge increase in the number of workers in Canada, and businesses have not been able to employ them fast enough to prevent the unemployment rate from going up. But I think it's important to understand the difference between this type of rise in unemployment and the type of rise in unemployment when there are mass layoffs happening, right? That is a much worse situation because it's telling you there's a sharp cyclical downturn happening. It's usually associated with quite a deep recession when you get firms actually laying people off. And it tends to be what happens late into a recession. Managers, for all, CEOs are evil and everything, but actually they try quite hard to avoid laying people off. And they try to find other solutions first. So by the time you're seeing layoffs, everyone already knows you're in deep, deep trouble. What we're seeing is something slightly different here, which is that demand is sort of ticking along fairly consistently, not very excitingly, but sort of 1% to 2% growth per year in aggregate demand, partially helped by new arrivals going to bring a new spending power with them. But you're seeing supply capacity, mostly in the labor force, really just opening up very, very quickly. And so what that means is your challenge is not to prevent layoffs and bring people back to work. It's to absorb this larger labor force into productive work. And to do that, you do need to generate more business demand for labor. So really what you need to do is you need to get interest rates down. You need to make the cost of borrowing much cheaper. You need to get people starting new projects. And you need to be creating that demand for labor. We're not there yet because we've had tight monetary policy that was dealing with the prior inflation episode. But now that that's kind of under control, what we're seeing is the bank explicitly talking about these exact issues, these per capita problems, getting the labor force to work, and setting interest rates low enough to achieve that. But it's gonna take some time. So we're gonna see a sort of bloated workforce for a while. And so unless they become more productive, that sort of means a period of relatively stagnant output.
One other point I want to make about immigration, the Premier of Ontario, Premier Ford, recently held a press conference, and he was talking about immigration and the burden that's placing on the province because most of these people come to Southern Ontario. And he mentioned that Ontario, or the taxpayers of Ontario, are paying over $1 billion a year housing and feeding these asylum seekers and refugees. And I just wonder how long we can sustain that because you don't mind doing this for a short period of time until these people get up and until they get up and running and they start contributing to society and to the economy. But this can't go on for year after year after year.
Well, I mean, I think it's important to point out that most vast majority of new arrivals in Canada are not asylum seekers, and they're not sort of destitute. They're actually bringing in the amount of money you have to bring in to get a visa or permanent residency to prove that you can bring into the country is not small. And so, most people do arrive um, as potential future like high contributors to the economy. The problem is they all then immediately look for an apartment or try to buy a house. Some of them get sick. Everyone buys a car. And so you see infrastructure very quickly coming under pressure, even though these people are bringing with them positive contributions to the tax base kind of immediately. So I think Ford was talking about a sort of different but related problem, which often gets kind of mixed in when we're talking about net migration, which is that there has been an increase in asylum seekers too. There's also been a big rise in homelessness in Southern Ontario, part of which is related to immigration asylum seekers, a lot of which is related to, ordinary Canadians struggling post-COVID. And then there's also, the opioid crisis laid on top of that. So it's a very complicated problem, but it is expensive for taxpayers, no question. I think though that deflecting that into a pure immigration problem was a bit of a political ploy from Ford more than a sort of helpful policy stance, I would say.
What really amazes me about both Prime Minister Trudeau and the Premier Ford is they've only become more vocal here in the last couple of weeks because of the comments we've heard out of Trump and about this potential trade war and additional tariffs placed on Canadian goods. Maybe you can speak to how important this trade relationship is between Canada and the US.
Yeah, I mean, just there's an interesting parallel there. We're at most 11 months away now from an election in Canada, which is about the time that Biden also started suddenly paying very close attention to immigration, right? So definitely, I mean, I'm slightly speaking for myself now more than the firm, but I think the left is doing itself a big disservice by um, by the timing in which they're talking about being tough on immigration, because I think it's politicizing the issue more than making it a policy issue, which is really what Canada's always treated it as very successfully. So there's been an issue there. But yeah, I mean, the trading relationship is fundamental to Canada's economy and always has been. And it's important to the US economy as well, although obviously not as important as it is for Canada. But of course, there are northern states that are very tightly linked to the Canadian economy. And so it's one of the world's most successful trading relationships. It's the world's largest peaceful border. It's a good thing that North America has going for it. And it's now coming under threat. So maybe just to contextualize how important it is for Canada. Canada exports, total exports are about 27% of GDP in Canada. It's a diversified economy, so that's less than a lot of other countries you would look at. But it's a little bit more than Japan, for instance, which has a bigger services and domestic economy. So it's not nothing. Now, the difference between Canada and almost every other country, barring Mexico, is that almost 80% of those exports go to the US. So it is fundamentally tied to one major trading partner. And so when you put those two things together, what you get is that exports to the US constitute almost 20% of GDP. So it is a huge deal for Canada, a huge deal. Now, there are a few caveats because that's goods and services. So the goods share is about 40% of that. And then you also, well, sorry, more than that, about 60% of that. And then you also know that if there's one thing Trump cares about, it's keeping pump gas costs for US consumers as low as possible. So he's not going to touch Canadian crude exports, which is more than 20% of Canadian exports. So as price goes, that changes as the price goes up and down, but it's about that. But it's still easy with a huge chunk of very vulnerable industries. And so, yeah, Canada, it's mission critical to make sure that they can avoid that 25% tariff.
Yes, and just as a reminder to our American viewers, there's so many things that Canada produces that the U.S. needs. In addition to oil, I believe it's 4 million barrels a day. Uranium, Canada is the world's second largest producer of uranium. The world's largest consumer of uranium is the U.S. 20% of their grid comes from nuclear energy. And without that uranium, they can't run those reactors. And I should also mention that the U.S. produces virtually zero uranium. And Canada is also the world's largest producer of potash. And once again, the largest buyer is the US. So without that potash, you don't have fertilizer to grow your crops. So the relationship is very important. And I think another element, I'm not sure if you touched on this, but is the auto industry between our country and also the US.
It's a completely integrated production chain. If you go somewhere like Windsor, there's trucks flying over the border 3, 4 times a day between Detroit and Windsor. And you're gonna put a 25% cost every time you do that. It's gonna hurt both sides, right? And this is what kind of makes us fairly skeptical that we actually end up getting these kinds of tariffs, right? Because the costs to the US consumer are significant, and it's not clear really what Trump stands to gain by bullying Canada and just, making that trading relationship really expensive. It's not something like China where there are obvious geostrategic reasons to be taking a much harder stance. It doesn't make a huge amount of sense. And so it looks like this is kind of the old Trump playbook where, he realizes he has a pressure point. He pushes it until Trudeau, whoever's there, cries uncle on some other issue. At the moment, it seems to be more visible border policing, which is pretty easy for Canada to satisfy. Sticks and Mounties at the border, maybe even the military, uh, raise raise military spending as a share of GDP, and probably the tariff threat goes away. So this is not just about trade; it's about Trump getting a few other wins that he wants, and Canada, if it's smart, will satisfy those.
Yes, in my mind, at the end of the day, it's just grandstanding. It's just part of the negotiation process. And our two countries have been working together for decades or centuries, and that's going to continue. And the US benefits, we benefit from them. And I think what's more important, though, is what's happening here domestically or internally and the policies that our government puts forth to grow this economy. And I think that's what is really important. What do you think the Trudeau government should be doing to meet that end goal?
Yeah, I mean it's a difficult time to be asking that question because I mean the Trudeau government's had more than a decade to to be doing it. And constitutionally, Canada has to have an election this year. So, you know, the chances of getting sustainable long-term policy changes are out of a government that's basically in election mode is pretty difficult. But there are certainly things that they should be doing. And I think number one on the agenda should be the housing situation in Canada. So there's a clear, large uh, supply shortage of homes in Canada. There's been huge misallocation as well. There's been a big overbuild of like one bedroom condos in Toronto, which is now a popped bubble. And meanwhile, anything with two, three, four bedrooms or a house is horrifically undersupplied. Um, and there's been some announcements, but it requires enormous coordination between the different levels of government. That's getting very sticky, but a lot needs to be done. And the benefit of this is um, you support the construction industry, which is an enormous employer, and especially an enormous employer of the exact type of people who are struggling to get access to the labor force right now. So meeting that housing supply gap should be number one priority for any government. And then I think you need to find smart ways to make the economy generally more productive. I think, the Department of Government Efficiency in the US, I have my reservations about how much they can get done against the swamp. But I think, you're seeing places like Britain making a huge push to reduce planning costs and approvals and permits and all of that, because that's been similar to Canada, really holding back that housing market and making it very difficult to do large infrastructure projects, which will sound familiar to anyone who's, around kind of Midtown Toronto and watching the Crosslink debacle or trying to deliver a train for 15 years. So, I think those types of things, improving the efficiency of cities, improving transport networks, making it easier for investment to come into Canada and for that investment to be put to work. Those should be the big focus of any new government. And I think, one way to characterize the Trudeau government is it's try to do too much in too many areas and hasn't been focused enough to really deliver on the key things.
Yes, I think the long and the short of it is the Trudeau government spent too much time focusing on using the right pronoun as opposed to implementing proper economic policies, which would grow the economy and lead to a higher standard of living for Canadians.
I think the example you would want to point to is the big fiscal consolidation of the mid-90s under the Chrétien government, where there was a very explicit acknowledgement early on that too much was happening. There were too many programs, and the way that they really got into a situation of a surplus and triggered this big investment boom was to say, we're going to absolutely narrow our focus to doing one thing, this enormous program review, get a reset on the government's role in the economy, and really define properly what our role is and what's going to be left to the private sector. And that's all they did for 2 years, right? And so I think the notion of focus is very, very important.
Dale, I want to ask you about the Liberal government's recent initiative to give back $250 to 18.7 million Canadians. And this is going to cost the taxpayers $4.7 billion. At the same time, they also announced a break in the HST and GST for Canadians, I believe for 2 months. And this is going to cost $1.6 billion. What are your thoughts on these two programs?
Yeah, I mean, this is the type of policy that just absolutely infuriates economists. So, I mean, really what's happening is the government saying, for a limited time only, we're going to make spending slightly cheaper, and give you a little bit more money in your pocket. Now, in my view, that's just absolutely no way to make policy. If taxes are too high, which sort of is maybe implied by this GST holiday, well, maybe you should review your tax policy, right? Um, or if prices are too high, think about how to get them down. It's so temporary. It leads to this little sugar high for a short period of time. And it changes absolutely nothing about the sort of fundamentals that it's trying to address. And I think that's, it's not just that it doesn't achieve anything, while costing a lot and endangering almost definitely meaning that uh, Finance Minister Freeland is going to miss her full targets. I think it really actually does long-term damage to the quality of policy making. If you have effort being spent timing minor giveaways that sort of capriciously come and go, you're increasing all this sort of conversation and pressure on government to be doing this kind of giveaway stuff instead of focusing real time and attention and even communicating to the public, that there's going to have to be some pain in order to generate structural reforms that are going to make them better off in the long run. I just think it's very irresponsible, very cynical policy making, and it's not going to help anyone in the long run.
Essentially, it appears that he's just trying to buy votes.
Yeah, it's very hard to produce a supportive rationalization. Yeah. And I don't
Okay,
think it's gonna work, by the way. Like if you listen to all the commentary around it, even people who are happy to have the money then say, well, how am I going to feed myself in February? So there's an acknowledgement even among supporters that it's just a naked poor policy. very political.
You touched on the Bank of Canada earlier, and the Bank of Canada has been very aggressive in cutting interest rates, and they have cut interest rates 5 times here in the last few months. The bank rate's gone from 5% down to 3.25%. And I recently read an article by Reuters, and it said that in 2025, 1.2 million fixed rate mortgages are coming up for renewal. And 85% of those mortgages were contracted when the Bank of Canada rate was around 1%. What are your thoughts on what the Bank of Canada is doing? And do you think they're being aggressive because they see an impending problem on the horizon in terms of these renewals?
Well, I think the bank is very grateful that they've been able to get inflation to a position where they can cut rates. Because yeah, if those mortgages were resetting back to where they would have been if the bank rate was above 5%, it would be an enormous hit to discretionary consumer income. Um, Basically, there'd be people whose monthly payments would be tripling, quadrupling, right? Obviously, not everyone can afford that, so you'd also get a big release of supply into the housing market. You get a lot of restructuring, refinancing. Banks would be provisioning more than they have to. So yeah, I think the bank's been worried about this sort of impending reset. Um, but they've been able to get rates down a lot in the last few months, and but this is one of the reasons that we think there's much more to come. Inflation pressure has really, really died down. Demand, wages are coming down. Consumer demand's pretty flat. After this little tax holiday, which will, pick up demand a little bit and then pull it down again. Um, there's not a lot to be worried about on the inflation front. And so, the bank can basically keep going until they get rates to somewhere they think is sort of comfortable for those mortgages to reset. And that's probably another at least 100 basis points to get there. So yeah, if we'd be in a terrible, terrible situation if inflation was still running high at the same time. That said, I think the Canadian situation has shown that there's actually a lot to be said for these shorter mortgages because they got very fast pass through of rate settings into the economy. And part of the reason inflation has come down so sustainably and durably compared to the US is exactly because it transmits through the housing market much more quickly. And so partially it's by design that way here.
One of the issues, though, with cutting rates and being so aggressive, the interest rate differential between Canada and the US has widened significantly. And therefore, our dollar, it's down 8% versus the USD this year alone. And I was in New York recently. Like I'm paying a buck 42 now, which translates into a 42% premium for everything I buy. And when I buy a cappuccino now, I'm looking at, $10 Canadian dollars. Maybe you can just speak to that and what this means.
Well, I mean, tough matter.
Canadians.
The Bank of Canada governor would have loved for you to have gone to Montreal or Banff instead of New York, and that's exactly what an exchange rate devaluation like this is trying to do. It's trying to stimulate A, how much Canada earns off its exports to the US, but B, also retain some demand locally. So, you know, when your economy is much weaker than your major trading partner, it is right that the currency depreciates to try and offset that. In fact, it's the whole point of a floating exchange rate. So yes, the interest rate margin's bigger. Yes, the loonie has depreciated, and that's exactly what should be happening in order to help the bank navigate this period where the Canadian economy is a lot weaker than the US economy. So it's not pleasant. And of course, there are inflation risks, but there are other factors domestically pulling inflation down so much that it's outweighing the concern over the weaker currency.
And Dylan, when we look out to 2025, like a lot of things we discussed are not positive for the Canadian economy. And you talked about GDP, declining GDP per capita, a stagnant productivity, labor productivity. Um, we talked about these mortgages coming up for renewal here in 2025 and 2026. That's going to result in much higher mortgage payments for a lot of individuals. Things don't look too good in 2025. Do you see the potential for a recession in Canada?
Well, the potential is definitely there. And in fact, if you strip out the effect that immigration has had on aggregate growth, we would be in recession already. So the fact that immigration is going to turn net negative next year, if something else doesn't change, mechanically there will be a recession from that. And so, yes, it is a very real risk. Now, what might help avoid that recession potentially? And we're talking here in Canada, we usually use the two sequential quarters of the negative aggregate GDP growth as the definition. Of course, there are many arguing, and you can be sympathetic with this view, that the fact that unemployment is going up so much and the fact that per capita GDP is going down means we're already in recession. So that view is out there. But in terms of, relative to the technical definition, um, basically we're relying on the Bank of Canada to stimulate the economy enough to avoid it through lower rates. That's another reason we think rates are coming down. We are seeing some sort of signs that that's starting to have an effect. Businesses, cost of debt is going down. It's getting a bit easier to invest. Some businesses are doing very well off the weaker loonie, and that's having a stimulative effect as well. So there might be just enough to avoid a recession, but it's definitely not guaranteed.
And the other big unknown too is Trump and what policies he puts forth in the coming year.
Absolutely.
Well, Dylan, that was a great discussion, and I want to thank you very much for spending time with us today. If somebody would like to learn more about you and Rosenberg Research, where can they go?
RosenbergResearch.com, very simple. They can sign up for a 30-day free trial to all of our research. So everything Dave Rosenberg writes, everything I write, and the rest of the team, including some of our great market strategy products as well. We don't just do macro.
And I will make sure I include a link below in the show notes. Dylan, once again, thank you.
Thanks so much, Jamie.